All right. There's never enough time to talk about these topics, but we do have an action-packed day, and I am so pleased to announce our next guest. So we will continue the conversation, and our next conversation is about how blockchain is changing the capital market. Our next guest will share his insights on how this is happening. He's the director of Provenance.io at Figure, which is a financial technology company leveraging blockchain AI to deliver innovative home equity release solutions and other products that help improve the financial lives of our customers. So ladies and gentlemen, please join me in welcoming Zev Shimko to the stage.
For the warm welcome, and good morning to everybody in the room. I do have some slides prepared today, so I think I'll try to stay on this side of the stage so you all can see them pretty clearly. My name is Zev Shimko. I am the director of Provenance at Figure. Figure is an innovative financial technology company that provides, and let me just find the clicker here. Here we go. Great, so just to provide a quick distinction between Figure and Provenance. Figure is a fintech company that provides innovative financial products to consumers. And so today, you can go to figure.com and see products such as HELOCs, which are home equity line of credits, mortgages, and student loan refinancings. And we've created new processes for all of these products. And so you can actually, within 5 minutes, receive an approval for a HELOC, and within 5 days, receive funding from your bank. And so if you contrast that to the traditional product, these processes typically take a month to receive, and we've really streamlined that process. And the way we do that is through new technologies and new digital applications that we've built. On the other side of the equation, we have Provenance. Provenance is a public but permissioned blockchain that was built by Figure specifically for the financial services industry. So all of the production that comes from Figure, the full life cycle of assets, from origination to servicing to sales, and ultimately, and soon, securitization, is entirely done on the Provenance blockchain with a massive amount of realized benefit. It's important to note that Figure did build Provenance and has subsequently spun Provenance out for more participants in the ecosystem to participate in. We actually announced in September of this year our second originator to join the ecosystem, Caliber Home Loans, which we're really excited about because we're starting to see this ecosystem grow and more participants use this technology. So I want to talk a little bit about what Provenance is in more detail and how it is in fact changing the way we operate within capital markets and how we interact with these financial assets. So what is Provenance? Like I said, it is a blockchain that is public but permissioned. And it's important to have the permission component in financial services. As you may or may not know, with Bitcoin, for example, it's a permissionless system, right? So anybody can use Bitcoin, send and receive Bitcoin. You can actually track the full history of transactions, and that's publicly viewable and provides this certain level of auditability. We do have that auditability in Provenance as well, but because we're dealing with investors, we're dealing with very sensitive loan data, for example, we're dealing with transactions like securitizations and other financial assets, you do need this element of the permissions that does not come with some of the traditional cryptocurrencies that you may have heard about. When I say trustless data, what does that mean, right? We actually have, instead of individuals, teams of analysts, people on Microsoft Excel sheets running, confirming, reconciling data, we have smart contracts running to, one, confirm the existence of data that you would expect to see, but also to confirm the metrics that you need in order to evaluate a loan file, for example. And so if we are originating and selling a HELOC to an investor, you may expect to see a HELOC agreement, you may expect to see an auto pay agreement. And so we have smart contracts running through the origination process that confirms that all the documents that you expect to see are in fact there. And then we also have underwriting guidelines. And so how do you confirm that for all the loans and all the products you have that nothing is below, for example, the minimum FICO? Nothing is above the maximum DTI. Again, those are all smart contracts, and so there cannot be a loan originated on our system that falls outside of those underwriting guidelines. So smart contracts ensure that the loan files that we originate, that we sell, that we service are all in accordance to our policy and underwriting guidelines. And when I say our underwriting guidelines, I mean those of Figure. When we have other originators with their own assets on the blockchain, they'll customize their guidelines for their products, for their needs. Next, you have the immutable history, right? So in the same way that you cannot change, well, you cannot typically change a historical Bitcoin transaction, right? You may have heard of 51% attacks, which are possible but have not happened yet in Bitcoin, right? You can see the full history of loan information on provenance, right? And so if you think about being an investor and perhaps purchasing a loan, you might want to know if that borrower was ever delinquent. Did they miss one payment? Have they missed 10 payments in the past? Is this a recurring behavior? Just because a loan or an asset might be current and performing today, that might not be the case for all of its history. And as an investor, you may decide, okay, is this loan trading at par? Should I be paying a premium for this loan? Should I be getting a discount, right? So that's all very important information when you think about financial assets, and it translates across products, across sectors. And lastly, distributed information. So we actually have today, live and running, we have 12 nodes, and that consists of leading global institutions that are all operating within the provenance system. And so if one node were to be affected, the network can rely on the remainder of nodes to ensure the integrity of information. So these are really the highlights of many blockchains, which also tie to provenance. And I'd like to talk a little bit about how that translates to capital markets activities specifically. So we see provenance as three things for capital markets: a ledger, a registry, and exchange. So as mentioned, the ledger, which essentially tells everybody who owns which asset, right, provides this increased level of transparency, auditability, and now you can imagine a world where you don't necessarily need third-party auditors. If everyone is working off of a shared system, you save costs, you improve efficiencies, you reduce errors, all of which improving the bottom line. Registry is really important, and because our assets are digitally native, meaning they were originated on-chain, they're not digital representations of off-chain assets, they are actual digital assets. Our HELOCs are a digital product. Those live within the blockchain as well. And so what that allows you to do is actually have the ability for instantaneous settlements. And so because these assets are digital, if we enter into a trade and the smart contract runs to settle that trade, one of the banks that are part of the system will be instructed to send you cash to settle the trade, and another smart contract would run and send me the assets as part of that trade. And so you don't have offline files, you don't have third-party custodians. All of the information you need as part of the financial asset, as part of the transaction, all live within the shared system. And lastly, exchange, right? Why is it that we can send text to each other immediately, we can send Venmo payments, we can send crypto payments almost immediately, but it takes days, weeks, if not months to send financial assets between parties? So sure, you have legal considerations, there are agreements, but a lot of these are repeatable processes. And so we've created a framework where we can actually, and we've done this with hundreds of millions of dollars of loans, we can sell portfolios of loans in minutes or hours where it's taken other companies days, weeks, or months to facilitate a similar transaction. And I'm not sure how many of you are familiar with, a loan sale, for example, right? You need document custodians, you need trustees, you need teams of analysts on both sides. You have multiple reconciliation meetings. You have different files you're working off of. You update those files before the trade itself. You have erroneous data. Usually there's some sort of repurchase after a trade because there was a mistake. There are loans that do not conform to underwriting guidelines, et cetera. And it really does take weeks to complete this process. Again, we've done that in hours, and the more complex a transaction gets, it really highlights the benefits of this type of system. And so if you think about a more complex capital markets transaction, let's take securitization, for example, which is a $3 trillion global business. We can also improve this process tremendously. And so in the very near future, we'll be excited to announce our first securitization entirely executed on provenance. And again, what that means is those loans have been originated, serviced, pledged to a warehouse facility, sold, and securitized all within the same system. These assets have never been taken off of the system, and all parties involved, whether it was the originator, the loan buyer, the facility provider, or an investment bank, have all been brought onto the provenance system. And so, just like we originally anticipated, we'll be demonstrating savings of about 100 to 200 basis points on a couple $100 million deal. And so as you can see, that is real savings, and we feel like there is a lot of room to improve. One thing we haven't yet proved out are the impact, is the impact of provenance to ratings enhancement, right? So if you think about a rating agency, what do they care about? They care about accurate data. They care about repayments on pools of loans. And so a system like provenance allows them to see payments coming in real time, allows them to update the models, ensures that there are fewer or no errors in a transaction. And so we even think that we can get ratings enhancements to these deals by using something like the provenance system. Again, it's improved the process by about 100 to 200 basis points for a couple $100 million deal. You can see why we're starting to gain a lot of momentum and other parties are joining the provenance ecosystem. So just to put, again, some of the numbers into perspective that I mentioned, again, 100 to 200 basis points, in other words, 1 to 2%, does translate to quantifiable savings. So what's the larger opportunity? We don't think this stops at loans. In fact, Figure's first product was the home equity line of credit. Figure has originated over $600 million of HELOCs on the Provenance platform. Within the last couple weeks, Figure announced a mortgage product and a student loan refinancing product. As I mentioned, in September, we announced the addition of Caliber Home Loans to the Provenance platform. We have several investment banks. We have tens of investors all on this ecosystem, which we expect to grow at an accelerating rate throughout the remainder of this year and next year. There is trillions of dollars of global wealth and hundreds of billions of dollars that are tied to companies like administrators, custodians, trustees, et cetera. Hundreds of billions of dollars of that is tied to staffing, teams that focus on reconciliation, compliance, loan integrity, et cetera. And counterparty and settlement risk also takes up a lot of value in the ecosystem, right? So if you can't ensure, for example, instant settlement, if you send an institution money for a transaction and you don't get the asset in return, that creates a lot of issues, as you can imagine. So I do want to end on where we are today with provenance. What does the ecosystem look like right now? As mentioned, Figure has originated about $600 million of HELOCs at a run rate of about $100 million a month. Again, that's with one product. We've announced the addition of 2 more products over the last few weeks, and we'll be announcing new originators coming on board over the coming months. We have 12 nodes from leading financial institutions such as Franklin Templeton, Experian, and we'll selectively add global partners on the node side, again, over the coming months as well. Loan originator members, the more the better. We almost see this as a public utility, as a social network. If we have 2 originators on Provenance today, we want 10 tomorrow, we want hundreds in the future, right? And you can envision a system where you have all these originators using a shared platform. Imagine the operational efficiencies that you gain if you're on the other side dealing with these companies. We have a $1 billion warehouse facility from Jefferies on Provenance. We're onboarding 2 more banks for large warehouse facilities again in the coming months. We have about 10 loan and security buyers on our platform. We have a huge pipeline of loan buyers. We simply just don't have the production right now to satisfy that demand. Omnibus Banks, this is really important. How do you move fiat between participants in a transaction, right? You need banks to be part of the system. And so today we have 1 Omnibus Bank that connects to Provenance that can be instructed to move funds between investor or bank accounts. Again, so everything, again, happens within the Provenance ecosystem. And now imagine if you were a bank or a warehouse provider and you purchase assets from company A and company B. Those look like 2 very discrete processes for you, and it's about twice the amount of work. And now imagine buying assets from 10 different companies. If all of those companies end up originating assets on Provenance, you can cut down your operational teams and, again, really improve the bottom line. And so many people believe that there will be many blockchains all working on discrete problems within capital markets. We believe at Provenance that there will be one ubiquitous platform for many capital markets activities across multiple asset classes, and that can be Provenance. And we also have an administrator. And so how do you govern a separate non-stock corporation? You need to make sure that the smart contracts don't interfere with the system. You need to make sure that there's no nefarious code. And so we do have an administrator that, again, ensures the integrity of the system, that will review smart contract code and add governance to Provenance. And so this blockchain is not just theoretical. It's been in production for a year and a half. We've added participants over the last 6 to 12 months, and we're seeing the interest continue to grow. So we're excited for Provenance to turn into the de facto capital markets platform. We'll be announcing, and stay tuned, more warehouse providers in the coming months. We'll be announcing our securitization in the next few weeks here, and more originators in the pipeline as well. And so hopefully 1 year from today, you'll see 20 different assets from 100 different originators and 50 different banks providing warehousing, financing on the Provenance ecosystem. So I'll conclude the presentation there, and maybe we have some time for some quick questions. Again, if you have any questions, I'll be hanging around for the next few hours at least, or you can email info@provenance.io. Again, thank you for the time. I hope you found the presentation interesting, and I hope you'll be hearing a lot more about Provenance and Figure in the coming months.
Well, thanks so much. Well, thank you very much, Zev, and I don't want to let you go. I want to give our audience a chance to ask a question or 2 before we introduce our next guest. So we do have a mic if someone has a question. Nope. Oh, you have one. Okay. Just raise your hand and we'll get the mic over to you. Zev is around. You're going to hang around for a bit should someone need to reach you. Perfect. All right. Thanks so much.
Well, looks like we have one in the back.
Can you elaborate a little bit more about your partnership with Caliber, and specifically the value that Caliber expects to achieve from this partnership? Sure. So, is this still on?
Yeah, I think so.
Sure. So with our other originator partners, they see the benefits in the origination process. And so because we started Figure with the HELOC product, it's actually a product that not many banks or institutions offer. And so we can go to these institutions and say, look, try Provenance with a new product, try it with the HELOC product. Once you start to see the savings as part of the origination cycle, you can then migrate that to your mortgage business. And so what we've created is a fully digital process for HELOCs. We think that we can capture the same types of savings for mortgages and other related products. And so Caliber, for example, will be originating on chain. They're already originating HELOCs on provenance. And if they see the benefits that they think they'll see, they'll start to integrate that into the mortgage side of the business as well.
Do you see blockchain's opportunity to disrupt traditional mortgages, conventional, non-conventional, non-QM in the coming future?
The short answer is yes, and I wouldn't say disrupt. I'd rather say enhance. And so if we're able to save 100 to 200 basis points as part of those processes, that'll either end up going to the bottom line for the originator and the company themselves, or ultimately be passed through to the borrower to receive a better rate. And so I think all of these products should be on blockchain distributed ledger systems, broadly speaking. And if we can demonstrate the cost savings across all these products, if we can save 100 to 200 basis points on a HELOC securitization, trust me, the savings are also there on consumer loan securitization, on non-QM, et cetera. And so all of these products are relatively similar at the highest level. And so the benefits that we've seen on our HELOC product, I think, can be expanded to all the other asset classes as well.
One final question. So with the savings on the HELOC products, now I do understand that the big banks really have the cities, the Chase, the Wells, the BFAs of the world. They have a lock on the home equity line of credits because of their strength in deposits. Are these HELOCs able to compete with their rates?
So the $600 million in origination should give you an indication to that answer. I would say that the largest institutions on the HELOC product do beat us by rate, but they don't even come close to the speed of execution, right? So when we can approve somebody in 5 minutes, banks will take weeks. Someone might be okay paying an extra point or two for the HELOC with Figure. Long term, I do hope and think that we'll have similar cost of funding, and we'll also have those bank partners potentially using our tech as well. On the warehouse side, we are speaking with multiple large U.S. investment banks. We already have Jefferies on our platform that are contemplating multi-billion-dollar warehouses. And so I do see these banks more as partners, and I think we'll be the tech driving better execution in their products. Thank you.
Thanks so much, Zev. Thank you again, everyone. A big round of applause for Zev.